Robinhood Markets has evolved from a simple commission-free trading app into a broader financial services platform. The company now offers stocks, options, cryptocurrency, retirement accounts, Robinhood Gold, prediction markets, banking-related services, credit products, advisory services, and access to private markets. The investment story for 2026-2027 is therefore no longer just about retail trading growth. The bigger opportunity is whether Robinhood can turn its large and growing customer base into a diversified financial ecosystem with higher revenue per customer and stronger long-term earnings. Robinhood generates revenue primarily from transaction-based activities, net interest revenue, and other sources such as subscriptions and newer financial products. Transaction revenue benefits from customer trading activity, particularly options and cryptocurrency. Net interest revenue is generated from customer cash, margin balances, and other interest-earning assets, while subscription revenue is increasingly supported by Robinhood Gold. This diversified model gives Robinhood multiple ways to monetize customers and reduces its dependence on a single source of revenue. Robinhood delivered another strong quarter in the second quarter of 2026. Revenue reached approximately $1.31 billion, representing 32% year-over-year growth, while diluted EPS reached $0.62. Net deposits were approximately $22 billion during the quarter, and Robinhood Gold subscribers reached approximately 4.8 million. Transaction-based revenue increased strongly, while net interest revenue and other revenue also contributed to overall growth. The results demonstrate that Robinhood is increasingly capable of producing substantial revenue beyond its original stock trading business. Customer and asset growth are two of the most important indicators for the HOOD investment thesis. By July 2026, Robinhood had approximately 28.5 million funded customers and around $355 billion in total platform assets. Strong net deposits are particularly important because customer assets can generate interest revenue, trading activity, and opportunities to sell additional financial products. As customers become more deeply integrated into Robinhood's ecosystem, the potential lifetime value of each customer can increase significantly. Robinhood Gold is becoming an increasingly important part of the business. Gold provides subscribers with additional benefits and creates a recurring revenue relationship between Robinhood and its customers. With approximately 4.8 million Gold subscribers, the company has created a substantial subscription ecosystem. More importantly, Gold can encourage customers to keep more assets within Robinhood and use additional products. If subscription growth continues through 2027, Gold could become an increasingly important stabilizing force for the company's revenue mix. Robinhood is also expanding aggressively into retirement, advisory services, banking, credit products, and private market investing. Retirement is especially important because it can encourage customers to hold assets for much longer periods rather than simply trading them. The company's strategy is effectively to capture more of the customer's financial life. If a Robinhood customer uses brokerage, retirement, gold, banking, and other services simultaneously, Robinhood can potentially generate substantially more revenue from that relationship than from a traditional trading-only customer. For 2026, my base case model estimates Robinhood revenue at approximately $5.7 billion, representing continued strong growth from 2025. This forecast assumes continued customer and asset growth, healthy options activity, increasing Gold subscriptions, and further development of newer businesses. I am also assuming that cryptocurrency activity remains volatile rather than becoming the primary driver of growth. The most important factor behind this forecast is Robinhood's ability to maintain strong overall revenue growth while gradually diversifying away from highly cyclical sources. For 2026, I estimate adjusted EPS of approximately $2.70 in the base case. Earnings growth should benefit from revenue expansion and operating leverage as Robinhood scales its platform. However, the company continues to invest heavily in technology, product development, and expansion, so expenses will remain significant. If revenue grows faster than operating costs, margins can expand and EPS can grow faster than revenue. This operating leverage is one of the most important reasons the long-term HOOD thesis remains attractive. For 2027, my base case forecast calls for approximately $6.8 billion in revenue. This assumes that Robinhood continues gaining customers, increasing assets, expanding gold subscriptions, and scaling retirement, banking, advisory, and other financial products. I also expect the company to benefit from greater monetization of its existing customer base. The biggest potential upside would come if newer products begin contributing meaningful recurring revenue while traditional trading activity remains healthy. For 2027, I estimate adjusted EPS of approximately $3.35 in the base case. This forecast assumes continued revenue growth combined with moderate operating leverage. If Robinhood successfully controls expense growth while increasing revenue per customer, EPS could grow faster than the overall business. On the other hand, aggressive investment in new products or international expansion could limit near-term margin expansion. Therefore, the trajectory of operating expenses will be just as important as revenue growth. Robinhood has several major catalysts that could drive the stock higher through 2027. Continued customer growth is the first catalyst, followed by strong net deposits and asset growth. Gold subscriptions represent another important opportunity, while retirement, advisory, banking, and credit products could increase customer lifetime value. International expansion could eventually create another major growth opportunity. In addition, prediction markets, private market access, and AI-powered financial tools could create additional revenue streams if adoption continues. Cryptocurrency remains both an opportunity and a risk for Robinhood. During periods of strong crypto activity, transaction revenue can increase rapidly and attract highly engaged customers. However, crypto trading is extremely cyclical, and weaker market activity can cause revenue to decline sharply. Therefore, I believe the strongest version of the HOOD thesis is one where Robinhood continues benefiting from crypto without depending on crypto. If the company can grow options, equities, subscriptions, retirement, and other businesses simultaneously, the overall business becomes more resilient. Robinhood's competitive advantage comes from its technology-focused platform, strong consumer brand, and ability to package multiple financial products into a simple digital experience. The company has built a large customer base and has demonstrated an ability to cross-sell new products. However, the competitive environment remains intense. Traditional brokerages such as Charles Schwab and Fidelity have enormous customer bases, while companies such as Coinbase, Sophie, and Interactive Brokers compete in specific parts of Robinhood's market. Robinhood therefore needs continuous innovation to maintain its competitive advantage. The biggest risk for HOOD is valuation. Robinhood is no longer valued like a small, early-stage fintech company, meaning investors are already expecting substantial future growth. Another risk is trading cyclicality, because options, equities, and crypto activity can fluctuate significantly with market conditions. Regulatory changes are another major risk, because Robinhood operates across securities, derivatives, cryptocurrency, and financial services. Competition, technology spending, cybersecurity concerns, and slower adoption of new products are additional risks investors should consider. For my simplified DCF framework, I assume strong cash generation growth through 2027, followed by a gradual normalization of growth. Because Robinhood has greater earnings volatility than mature financial companies, I use a relatively demanding discount rate. Under these assumptions, my estimated intrinsic value falls approximately in the $125 to $145 range, with a midpoint around $135 per share. This suggests that HOOD can still offer upside from the current price area, but the stock does not have a large margin of safety if growth disappoints. Using my 2026 adjusted EPS estimate of approximately $2.70, a stock price around $108 represents roughly 40 times earnings. Based on my 2027 EPS estimate of $3.35, the forward multiple falls to approximately 32 times earnings. This is clearly a premium valuation, but the premium can potentially be justified if Robinhood maintains strong earnings growth. The problem is that high-growth stocks can experience significant valuation compression when growth expectations decline. Therefore, investors should monitor both earnings growth and the valuation multiple. In my bear case scenario, Robinhood experiences slower customer growth, weaker trading activity, continued weakness in cryptocurrency, increased regulatory costs, and slower adoption of new financial products. Under those assumptions, 2027 adjusted EPS could fall toward approximately $2.70 to $2.90. Applying a lower growth stock multiple produces a valuation around $80 to $90 per share. My bear case price target is therefore approximately $85. This demonstrates the downside risk associated with paying a premium valuation for a highly cyclical financial platform. My base case assumes continued strong customer and asset growth, increasing gold adoption, healthy options and equity activity, stabilization in cryptocurrency, and gradual expansion of newer financial products. Under this scenario, I estimate 2027 adjusted EPS at approximately $3.35. Applying a valuation multiple around 40 times earnings produces a price target close to $135 per share. Therefore, my base case 2027 price target for HOOD is $135. In my bull case, Robinhood successfully transforms into a diversified financial super app. Gold adoption continues increasing, retirement and advisory services scale rapidly, banking and credit products become meaningful contributors, and international expansion succeeds. Under this scenario, 2027 adjusted EPS could potentially reach approximately $3.70 to $4.00. Applying a premium growth multiple could produce a valuation around $165 to $180 per share. My bull case target is approximately $175. The extreme bull case requires Robinhood to become one of the leading consumer financial platforms globally. If the company substantially increases its customer base, grows platform assets rapidly, expands gold, retirement, and banking services, and successfully monetizes new products, earnings could potentially exceed my base case assumptions. If EPS approaches $4 or more, and investors continue awarding Robinhood a premium growth multiple, the stock could potentially reach $200 or higher. However, this should be considered an aggressive scenario rather than the most likely outcome. Robinhood is not currently a dividend-focused investment. The company is primarily focused on reinvesting capital into technology, product development, expansion, and growth initiatives rather than distributing regular dividends to shareholders. Therefore, investors buying HOOD should primarily be looking for capital appreciation through revenue and earnings growth. Investors seeking stable dividend income would likely prefer mature financial companies with established payout policies. Going into 2027, I would focus on 5 major indicators: funded customers, total platform assets, net deposits, gold subscribers, and adjusted operating margins. I would also closely monitor revenue growth outside cryptocurrency. If customers and assets continue growing rapidly while margins expand, the bullish thesis becomes stronger. But if customer growth slows, deposits weaken, and earnings estimates decline, the premium valuation could become a major problem for shareholders. My 2027 valuation framework is $85 for the bear case, $135 for the base case, and $175 for the bull case, with an extreme bull scenario of $200 or more. The large range reflects the uncertainty surrounding Robinhood's future growth rate and valuation multiple. At approximately the $108 level, the stock offers potential upside toward the base and bull cases, but investors must accept considerably more volatility than they would with a mature financial company. My final rating for Robinhood Markets is buy, but specifically as a high-risk, high-growth investment. Robinhood has impressive customer growth, strong asset growth, expanding gold adoption, increasing product diversification, and substantial long-term opportunities. The biggest concern is valuation. At around the $108 area, investors are already paying for significant future growth. Therefore, the stock could perform very well if management continues exceeding expectations, but it could also decline sharply if growth slows. Robinhood has transformed itself from a simple trading application into a broader financial platform with ambitions far beyond commission-free stock trading. The company's growing customer base, expanding platform assets, gold subscriptions, retirement products, banking initiatives, and newer financial services provide multiple avenues for long-term growth. My base case estimates approximately $5.7 billion of revenue in 2026 and $6.8 billion in 2027, with adjusted EPS increasing from approximately $2.70 to $3.35. Based on my valuation framework, I see a $135 base case target, $175 bull case target, and $85 bear case target. Overall, I believe HOOD offers an attractive long-term growth opportunity, but the premium valuation means investors need to be comfortable with significant volatility. My final rating is buy, with the key thesis being simple. If Robinhood can turn its enormous customer base into a diversified financial ecosystem, the company's earnings power could be substantially larger by 2027.